How's it going, fellow traders? Magic Trader here, and this is the CFTC data that was recorded on May 5th, 2020. Here is a brief snapshot of the positions held by the institutions as of that date. And so let's begin by examining gold. Alright, so what do we have here with gold? So back in late February, we had institutions at all-time highs of 408,000. We've since seen a decline in those numbers as they were taking profits from their positions. Okay, so that's from here, taking profits on long positions, drove price down, came back up, and now we're just stuck at these highs. Now, what's taking place is we have areas of demand that are being validated here, and I've detailed this in the latest Arujo report, and we've been talking about this over the last many weeks. We take a look at long exposure. It's at 92%. Coloration of the cells is suggesting that the institutions are very bullish, and you know, keeping very bullish, because look at what they've been doing with their short positions. Okay, they've been taking profits on longs, but they've also reduced their shorts. Now, there's a very specific reason why they do this, okay, and that's to maintain price at a very stable level. So they're keeping price at highs while they're reducing their long positions. So this is very key, okay, very key. I think this is going to reveal some very informative things, and I'll release a newsletter later this week, and I'll detail what I think is taking place here and what's likely to come. But taking a look at the positions, that's what we're seeing. And if you haven't subscribed, go to www.whiteoakfx.com, bottom right hand corner, and you can subscribe to the newsletter there. Alright, so let's take a look at oil. What do we see? We see them increasing long positions, but recently they dropped from 737 to 722. That came as price was consolidating here on the weekly chart before the push to the upside. So we know that they were increasing long positions, okay? If you take a look here and just examine what they've been doing with their long positions since March, okay? That's all of this here. They have been increasing their longs. Now remember, we detailed this in the latest, in the previous Arujo report. That price consolidated and closed within a monthly demand zone. Now remember, we also talked about how Sherlock was suggesting that what was going to take place was price was going to drop into this monthly area of demand, and then we would see a rally form. Since then, we got this big spike lower, and we know why. The cutting of the rates, the lack of use of gas. Oil demand has dropped because of the coronavirus and everybody being locked in and not being able to go out. So all these things combined caused price to drop. But as that was happening, they're using this as a time to buy. Now this is nothing out of the ordinary, because this is what typically happens. Now what you're seeing is economies are being flushed down. Things are not looking very good out there. Property values are dropping. Values of businesses are dropping. And if you read the history books and you take a look at what typically happens during these times, is the large institutions, the bankers, the big guys with the big funds, they come in, they start buying up. And lo and behold, this is what we're seeing with oil. Oil drops to record lows. I mean, crazy how low, okay? And now they're using this opportunity to buy. So are we expecting more upside to come? Absolutely. Absolutely. And Sherlock detailed this way before the coronavirus came. Alright, so that just goes to show you that the market dynamics are always what takes precedence over everything. You know, we're led to believe that the reason why the markets move the way they do is because of economic factors, but it really doesn't come down to that. It comes down to what the institutions are doing with price on the charts. Okay, so let's take a look at the US dollar now. We see this. Okay, take a look at all this. Blue, blue, blue. What does that tell us? No strong indication that price is going to move anywhere. Okay, so before the big spike in March, we had long positions cooled off. Short positions cooled off. Total size cooled off. Sentiment slightly in the neutral. Now since then we've seen an increase from 61 to 69, 72. Now we're at the highs of 75% exposure to the long side. But it's not so much because of accumulation of a long, because that does play a small role in it, but it's because of the big reduction in short positions. Alright? Now, I've detailed in the newsletter that was sent out that we are stuck within ranges here. There is a slight bias, and we're waiting for this to play out. So we'll wait and see how it does play out. As long as it stays within this range, it's going to be very difficult to trade. Do you go short? Do you go long? So when price is ranging, it doesn't provide us with many opportunities, so it's best to just wait on the sidelines. Aussie US dollar, longs are very cooled off. Shorts are somewhat aggressive, used to be very aggressive until they took profits, which fueled the move to the upside. Now, we see here there is a bias to the downside, bearish, and net positions are also net negative. So does that mean price is going to drop? Well, price is inside supply. It could drop, but we have indications that price is going to continue moving higher like that. Okay, but we're not seeing that in terms of their positions. Very cooled off. If price is going to go higher, why are they very cooled off? Okay, so we're waiting to see what is going to take place. Most likely price is going to go higher. Let's take a look at the US CAD. This is one that I'm very interested in trading, waiting for the signal to be produced, and we got good strong indications here of what is likely to come. Okay, if you take a look at net positions, we went from negative to positive. If you take a look at the sentiment, bullish. If you take a look at long positions, becoming aggressive. Take a look at short positions, cooled off. This is all an indication that price is going to move higher. And we've applied the Sherlock system to the charts, and we've indicated what we believe is going to happen. And again, we sent that out in the previous newsletter. Okay, so if you haven't subscribed to that, make sure you do, because there's a lot of good information that we're posting in there for you. Now, US Swiss franc, you take a look here, and we see that price is also in a range. As that's taking place, we got longs very cooled off. We got a slight increase in aggressiveness with short positions, and we can see the sentiment is bearish, and we can also see net positions is in the negative. Okay, does that mean price is going to go lower? Doesn't mean that. Okay, because we do have a demand in play, and there is a likelihood we're going to see more push to the upside. Okay, so the positions are not matching that. Okay, but the positions are showing us what's been taking place here. So we got to wait and see for those positions to concur with what the analysis is suggesting. Now we got the euro. This one's very much like the dollar, where it is stuck in a range between supply and demand here on the monthly time frame. We take a look at the positions, and we see that longs are the aggressor. Shorts have been somewhat cooled off, becoming slightly more aggressive over this last week. Okay, but we have to take into consideration that this pop up in shorts happened as price was rallying up here. Okay, a slight increase in longs, slight increase in shorts, and long exposure drops 1 point. Take a look here. Net positions turning from negative to positive. So we're still waiting for this to play out. It's taking some time because we got the higher time frames in a range, so that's what typically happens, is it takes its time. Alright, so let's take a look now at the pound US dollar. This one's a very, very difficult chart to read. We've got longs cooled off, shorts cooled off, total size cooled off, sentiment is neutral. Yes, net positions are going from positive to bearish, but I mean it doesn't really support a strong move to the downside just because it turns bearish, right? It's only bearish because they used to be long and they switched to being net short. It doesn't mean it's going to drop. Okay, this is the stronger indicator, and it's all blue across the board. So that tells me that they don't have any strong positions. They're not moving in any strong direction. There is no force right now on the charts to dictate what price is going to do. Now we have our indications of what's likely going to take place when we apply our analysis process, but I've spoken on that on the latest Arujo report. Alright, we take a look at the US dollar Japanese yen. Longs cooled off, somewhat aggressive with shorts. Total size cooled off. Bearish sentiment, bearish net positions. Take a look at that. Okay, 1, 2, 3, 4. We're in our 5th month consolidating right at that trend line. What is going on here? This is just crazy, right? So we're waiting for either a breakdown or a breakup. Otherwise, you try trading within there, you don't know what's going to happen. You don't know how high it's going to move up, how low it's going to drop. So I mean, if you want to speculate and try to make money in that, sure, you can do that, but it's not the higher odd move. Okay, so we move on to the Kiwi dollar, and we see the Kiwi longs are cooled off, shorts are aggressive, and net positions in the negative. Somewhat of a bearish sentiment. Does that mean price is going to move down? I don't think so. Let's take a look here. Over the last 3 weeks, we have an increase in long positions, and we're also seeing an increase in short positions. Now that comes as price was doing this. Now, applying the Sherlock analysis process, we've done our analysis, and the forecast is that we are likely going to see a push to the upside. Positions are not supporting that, but the analysis is telling that. So we'll wait and see how that does play out. Alright, ladies and gents, there is your CFTC information and data for May 5th, 2020. If you want to find out more about our Sherlock analysis process and how we examine the markets, and you're interested on how to do the analysis, draw the trend lines, do all the fancy stuff that we're doing, you can reach us at www.whiteoakfx.com, and once again, become a subscriber to the email newsletter. We'll be packing it with a lot of good information for you. Alright, thanks, and have yourself a great weekend. Take care.